Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with our Wednesday guest, Matt, the mortgage guy. How you doing, sir?
I'm doing great, Mike. Always a pleasure to be here chatting with you. Always good combo.
Oh man, I appreciate it. So, hey, one of the things that we talked about, I think it was 2 or 3 weeks ago, is we were saying that the mortgage industry as a whole is going to go through some adjustments. We actually called out what happened at better.com, right? They let go of 900 people because the business has changed. I think we are starting to see kind of the good and bad as the adjustment occurs. I think that the mortgage brokerage industry will be smaller in a year than it is today, because again, a lot of the lending will be just different, less refis, all of that. But you had some pretty good data around cash out refis. And it looks like we're setting some record numbers again, which, your house is an ATM. That didn't end very well last time.
Yeah, and that's the thing too. Is like, is it a good thing? Is it a bad thing? I've got a data guy that I get with, and it's enjoyable for me because, I'm in the trenches. I'm talking to hundreds of consumers every single month. So I kind of have a feel without seeing the data. And then you look at the data, which confirms what I'm feeling.
Right.
And, from a mortgage originator standpoint, more and more cash out refinances being done. And if you think about it, with home values at an all-time high, people have more equity, so they have more opportunity to cash out refinance. It makes sense, right? And so me and you talked about this shrinking pie where there's less and less people. Some people describe it as moneyness or net benefit, where if tons of people are in 275, 2875, 2.99, there's less benefit for them to do a traditional rate to term refi.
Right.
But the numbers on cash out refinances have gone past 1/3 of all mortgage originations.
Oh, wow.
Somewhere in the 35% range.
So I want to say that again. So just for people that don't realize, so that means 1/3 of new originations or new loans are essentially cash out refis.
Right. And we're talking conventional loans, which is like far and away, the
majority
loan. And so we can look at that. And, rough numbers, 35% of the loans being written are cash out refinance, 25% are rate and term. And then the other, roughly 40% is purchase.
Okay.
And, it's as rates go up, you'll see the total refinance versus total purchase kind of adjust and rotate back. And for me, that's interesting in itself. What concerns me from the standpoint of, a mortgage broker that has, a focus on serving consumers,
right.
Focus on helping people, making sure that people are set up for long-term success with their mortgage, which translates to their finances. It scares me a little bit because you and I both know debt can be an amazing tool. And I talk to people every day that are using this home equity and doing it correctly, right? They're paying off high credit card debt, or they're taking out and they're putting it in a secure investment that appreciates over time. And, that's the good side of it. The bad side, the chainsaw that can cut your arm off, is people, and I don't think this is happening as much, but I'm warning against it. Right. Cash out refinance to buy a boat, cash out refinance to buy a $90,000 car, cash out refinance and blow the money, which is probably even worse, right? You don't want to take it out for the sake of taking it out because you're able to. Right. You want to put together a plan. And, I can see the data from a big box lender, not to name any names, but Quicken. Over 50% of their loan volume is cash out refinance.
Well, I just want to talk about that because, again, I did a loan with them, I don't know, 3 or 4 years ago, was one of my first refis as rates were coming down. So maybe 3 years ago. They are extremely aggressive, right? They have blown up my phone multiple times a day for weeks, telling me, hey, you did this loan with us before, we can do better this time. right? And really what they are is they're just a machine that's hungry for deals. They got to feed the pipeline, and they don't have my best interest in mind.
Right.
They're trying to keep their sales machine going. So my big warning for folks is these big box lenders like Quicken in this example, and again, I can say that as a consumer of it and knowing what they're doing. They're not service oriented. They're not looking at your situation and saying no. Quicken is always going to say yes. Of course you need that 25 or 40 or 80 grand. Get it now before it's gone. You know,
right. I used this example, and it was funny because I want to record some of these calls. I've got 6 personal mortgages, and I let these folks call me because I want to hear what salespeople are saying.
Yeah.
When my first objection was like low rate, don't need a refinance, no thanks. It immediately turned to, and it's like part of a script, right? From a big sales center is all they are. He asked me some like really vague question, like, what do you have out back? And I was like, what do I said, out back, is that where the rates are? Or like, what do you mean? What do I have out back? Well, maybe you want to put in a pool. Maybe you want, you know, and that was like, I'm like, okay, I see what you're doing.
I got that.
Smart, right? And that's what I'm afraid of, because, you know, dealing with consumers, I understand it. I'm a human being as well.
Yeah.
Emotion sometimes can drive a decision. If you get excited about a kitchen remodel, putting in a pool, then the reasoning part of your brain shuts off, and you don't even see the fact that, like, oh, they charged me $14,000 in fees. Oh, I'm paying an extra 0.3% on $460,000 in mortgage debt. All the bad things that I want you to avoid. The call center loan officer or assistant, or, you know, they might not be licensed. They could care less about that, the long-term picture.
I want people to hear that again. One of the things that I've learned after 20 years of selling software is you have a choice as a sales rep. You either go in with logic, you know, savings, hard dollars, blah, 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 or you go and try to get their heart first. You get your heart by talking about a pool, a swing set, an ADU, whatever it is. And then the logic shuts off. You're absolutely right. So watch that. Be careful for that. Watch them fishing for that. That person who asks you what's out back, that's a genius move. But we'll set some people up for failure, because then they're going to start, hey, honey, did you know that they just talked about a pool? What do you think a pool costs? 40, 50 grand? Oh, we can get that in our house. Wouldn't you like to do that at our house instead of going to the neighborhood pool, blah, blah, blah. Oh, next thing you know, you signed up for $400 extra a month.
And that's the thing is that any business knows that we live in a society where consumers are like, that sounds affordable on a monthly basis. That sounds like it makes sense. If you're financing something over 30 years for $486 a month, you're signing a big check, right?
That's a big check.
Yeah.
Yeah. So folks, what we're saying here is, again, I think what I'm saying, I don't want to put Matt's words in his mouth, but what I'm saying is be very careful. Mortgage brokers, these big box stores, they've always been aggressive. But frankly, it made sense. As rates
I'm a mortgage broker. Be nice to mortgage brokers. There's independent mortgage brokers that are the good guy.
Yeah.
And then there's big fintech, and there's big, you know, retail operations that are the bad guy.
Talk to a person, not a machine.
Right.
Yeah.
And that's the thing too, is consumers, in my opinion, a lot of times are focused on the wrong stuff. Yeah. They're focused on only interest rate. They're not looking at total cost. They're focused on, you know, cheapest, when the cheapest is usually not the best. Like, you might find the cheapest financial advisor in the world and you lose 22%.
Right.
Or you find a financial advisor that's a little bit more expensive and you see 30% gains, right? In mortgage, it can be similar, where, like, yeah, maybe if you try hard enough, you could find somebody that's cheaper than me in my group. But I'm telling you, by structuring the deal correctly, by putting your, you know, best interest in mind and having the conversation, you know, extracting out of you what your goals are, and then say, based on your goals, here's what I see as a good mortgage solution. It's not always going to be a deal. There's going to be plenty of times where I go, listen, you've got this much locked in at 2.75. You only have enough equity to pull out 17,000 and cash out. You would never do that. Yeah. Raise the interest rate on all that debt for this 17,000. Just leave it alone, right? Yeah. One stat I'll throw at you that's amazed me yesterday as I'm talking through stats. They have stats for, like, the payoff rate or the turnover rate for specific pools of mortgages. And there's a pool of mortgages that are like 2.875 that should be paying off like 6 to 8%, because this payoff is within 12 months.
Okay.
Right? That pool is paying off at a 20% rate.
What does that mean?
Basically means that like all these pool of loans that were written at 2.875 are being refinanced out of that 2.875. A 1 in 5.
Oh my God. Why would they do that?
That's my point, is like you get somebody, and I know this, you know, I don't expect every consumer to be a financial expert,
right?
But don't get yourself in a position where somebody is able to, you know, I've seen the number gymnastics and well, I mean, I even had the phone calls too. I remember talking to a guy about like, why would I refinance? And he was talking to the wrong freaking guy, but he was like, well, your rate will go up, but it'll be this and that. And this is why it's better. And I'm like, what you're saying makes no sense. The unfortunate part is like somebody who just, to a random consumer, it's not, you know, they're great at their day job. They're not a financial person.
Right.
Talks them from 2.875 to 3 1/8 or 3 1/4, minimal cash out or whatever the reason is. People are doing it. And like the data shows it, you know, 1 in 5 people, maybe some of those made sense.
Yeah, maybe.
But I would guess that the rate where they should be getting paid off like 6 to 8% are the ones that made sense. And then 2/3 of them didn't make sense. They got sold. Yeah,
they got sold. That's what's happening a lot now. I just saw, I think Black Knight reported it this morning. 24% of loans originated have a less than 3% mortgage rate. I really think this is going to slow down the real estate market because you're not going to get the move up buyers. But folks, if you keep refining your 2.875 at a 1 in 5 clip, stop that. That is too much.
Right. Yeah. And I mean, here's the thing. Greatmortgagebroker.com. Reach out to me and my team. I love it when I hear stuff from my team that aligns with like how we're doing business, because we had somebody yesterday who came back to us and was like, hey, I really want to do this. I want to remove mortgage insurance. And my team comes to me and says, deal doesn't make sense. I know if they're saying that, they've done the work, right? They've looked at it and said, this person's going to remove mortgage insurance, but their rate's going to go up. We're going to tell them to stay put.
It's going to be a net loss just because you got,
Yeah, I mean, really, like here's the thing too, and to be completely transparent and honest with people, there's going to be mortgages written where it's a net wash. All this cost for this minimal savings, and it's going to take 5 or 7 years to recoup it or more. The only winner is the company that writes the loan and gets the commission.
Yeah,
I don't want to be that company. I don't want that person to do that, right? So greatmortgagebroker.com. Great advice. 2022 is going to be the year of the cash out refinance. I want to do all the good ones. I want to do the ones where it helps people win. I want to help people avoid where it doesn't make sense.
I love it. One more time, Matt, how can they find you? Because my channel, my folks need to reach out and just see if their situation makes sense, because you will tell them no.
Right.
If it doesn't make sense.
And they've been reaching out. I want to thank everybody who's reached out to the team. You know, on Monday's YouTube Live, I had a couple people. Thanks, Matt. I got connected with Brandon. He's great. Hey, thanks, Matt. We just closed one with Bo. He was great. Greatmortgagebroker.com. You can fill out a quick form where you're at, what you're looking to do. We'll be in touch within a day and put you on the right path.
Very cool. Thanks, Matt.